We're wrapping up the busy news week this week with one of the most important news events of the month. The U.S. non-farm payroll, or NFP report, came out today, and job numbers were much better than forecasted, coming in at 261,000 new jobs. The unemployment rate in the U.S. rose, however, up to 3.7% from 3.5%, so even though jobs are being created, others are losing their jobs. Canada also had new job numbers, expecting only 11,000 new jobs, but instead posting a staggering 108,000, keeping their unemployment rate at 5.2% instead of raising to the expected 5.3%. Now let's take a look at some EdgeFinder pairs.
All right, so here we are inside of the EdgeFinder, and of course the biggest thing that happened today was US NFP report, non-farm payroll. Job numbers came out better than expected, yet unemployment rate still rose. So even though people are getting jobs, companies are creating jobs, there are still so many people out there getting laid off and struggling to find work. So unemployment actually rose even though job numbers came out better than expected. So it only makes sense to take a look at a US dollar pair so that we can see those new numbers. We also had Canada release new job numbers today. So USD CAD would be a good pair to look at by score of +3. But let's see, USD JPY, USD CHF. Those are two good pairs I think that we should maybe take a look at, because USD CHF is a strong buy, USD JPY is also a solid buy, and I don't think that we've looked at the yen yet this week.
So this is how I like to use the EdgeFinder in my strategy. Starting with the smart money tracker, we can see here that institutions are about 75% long on the USD. And looking at the score chart summary, we can see that USD CHF is getting a buy rating of +5. So with all of those factors fundamentally pointing towards a long bias on USD CHF, I know I'm going to be looking for buys. I can then go to the 4-hour chart and see that USD CHF has been continuously trending higher, making higher highs and higher lows. I also identify my key levels of support and resistance, so then once we get a correction into one of my support zones in confluence with a 618 Fibonacci retracement, I can take high probability longs with lots of confluences behind my trade idea. If you want the EdgeFinder for yourself, take advantage of the massive 40% off Black Friday sale by using my code Jake at checkout.
So here we are in the USD JPY breakdown page, and let me just show you guys something really quick. This is why you need the EdgeFinder for yourself. Unemployment numbers came out this morning, just a little over an hour ago, about 2 hours ago. And look, in the EdgeFinder, we've got it updated, 3.7% unemployment. The EdgeFinder keeps you so up to date with all the current news events. I mean, if we look in here really quickly, if we just take a little detour over to economic news, today on November 4th, we can see all of these different news events that are happening today. And in fact, we can sort by, let's see, like if I wanted to see non-farm payroll, there we go. United States, non-farm payroll event happening today, impact high. Consensus was about 200,000 jobs. The actual was 261,000. And of course that our unemployment actually rose as well, as I mentioned earlier. Let's see what USD JPY. So yeah, I mean, this thing is just so unbelievable. It keeps you so up to date, so well informed, and gives you so much data of everything that's happening in the market, every news event, every time that something is updated. The EdgeFinder gets it so that you have all of this information in one place for your trades. So keep in mind, we have our Black Friday sale going all month long. If you want the EdgeFinder for yourself, there has never been a better time to get the product. 40% off anything in the store, including the EdgeFinder. So you can get the EdgeFinder 40% off using code A1YT at checkout. Go to the links down in the description. The EdgeFinder is amazing, as I'm showing you guys right now, and we're going to dive into the analysis in just a second. But code A1YT for 40% off at checkout. Go get the EdgeFinder for yourself. It is such a helpful tool. It has helped so many traders with their trades, helping them find more profitable trades, stronger looking, and it helps you with your confidence. You know, if you're not sure one way or the other, the EdgeFinder can help give you confidence going into a trade, because I know that the markets can be a tricky and confusing place sometimes, but the EdgeFinder really helps simplify your trading. So check it out. Black Friday sale all month long, 40% off the EdgeFinder, code A1YT. All right, let's take a look at this. USD JPY has an overall buy bias score of +5, and we can see that COT data score is +2. So we can come right down here over to our sentiment section and take a look at our institutional trader data, or COT data. US dollar sitting at 75.12% long and 24.88% short. And of course, institutional traders have just been super heavy long on the dollar for the past couple weeks. The yen, not so much, 21.14% long and 78.86% short. So institutional traders heavily shorting the yen at the moment. Retail sentiment, 35% long, 64% short. So retail traders overall are shorting the pair. That gives us a score of +1 here. Seasonality also has a score of +1. We can look here at November. If we're going to look ahead, all-time average and last 5-year average, I'm seeing a slight downward trend in the all-time average and a sharper downward trend in the last 5 years. If we want to look at like previous month, October to November, we can see in the last 5 years, October to November, a downward trend, and that was consistent with the current year average. So this gray line here is our current year average. So following the trend for the last 5 years, October to November, this has gone down. Trend reading is a +1 score, so that just means over the past couple days or past couple weeks, how has this market been trending? Has it typically been trending up, trending down? A +1 score means that this market is in fact trending upwards. And lastly, we have GDP growth, inflation, unemployment, and interest rates with scores of +1, -1, -1, and +1. So we can take a look at our fundamentals section over here. US dollar GDP growth 2.6% compared to Japan's 0.9%. Unemployment, like we mentioned, raised to 3.7% compared to 2.6% for Japan. Inflation 8.2% in the US compared to only 3% in Japan. And lastly, interest rates 4% for the US and -0.1% in Japan. And keep in mind, these interest rates, again, were only raised on Wednesday. On Wednesday, the Federal Reserve announced a 75 basis point rate hike, raising the interest rates from 3.25% up to 4%. So if you just need any more evidence that the EdgeFinder keeps you the most up to date on all things current events wise, I mean, there you go. Our US dollar news events happening this week, EdgeFinder is on top of it, keeping you updated with everything that's going on. What was the other pair? USD CHF was the other pair that we said that we would take a look at. Another buy, a strong buy, score of +5. COT data has a score of +2. So we can come right over here, take a look at our sentiment section. US dollar, again, I'll just kind of skip over this since we just went over the dollar. But we can take a look at Swiss franc here, 24.75% long and 75.25% short. So institutional traders pretty heavily favored on the short side for the Swiss franc. Retail sentiment following 36% and 64% short. So retail traders are shorting the pair as a whole. Seasonality is +1. So taking a look at this, November, historically speaking, all-time and last 5 year, look at that sharp downward trend from November to December. If we're taking a look at October to November, the all-time average was kind of neutral, and that was consistent with our current year average, while in the last 5 years, historically speaking, it dips downwards. But following in suit with the all-time average here, trend reading is a +2 score. So what that means is that this market is definitely in an upward trend. Our last pair, USD JPY, had a +1 score. And that means, yes, it has been trending upwards. But of course, as we know, markets are very volatile and they can kind of change at any moment. But a +2 score means that this market is heavily trending upwards. Lastly, GDP growth, inflation, unemployment, and interest rates are the same as USD JPY with scores of +1, -1, -1, and +1. And again, we're going to skip over US dollar because we just took a look at all of these same numbers. So we'll just read out the Swiss franc, 0.3% GDP growth, 1.9% unemployment, 3% inflation, and 0.5% interest rates. So that was a quick look at two EdgeFinder pairs here. I'm going to go back to the score chart summary so that you can see all of the different currency pairs, indices, and commodities. It's not just currency pairs that we have in here. You can see we have the S&P 500. We have things like gold, US 30, JP225, oil. In fact, I can even, let's just take away the currency pairs so that we can see the other things that we have listed here. German 30, oil, gold here. So lots of fun stuff here in the EdgeFinder. Fundamental analysis, we have different charts for all of these. Price forecast, Fed tracker is a new feature that we just added into the EdgeFinder. Lots of useful information here. So again, I'll mention it one more time. If you want the EdgeFinder for yourself, there has never been a better time to get it. Use code A1YT when you check out. The links are down in the description. Code A1YT for 40% off the EdgeFinder.
Now we're going to check out some stream highlights from today's news event featuring TraderNick, Evind, and Trader Jake.
And we've got about 8 seconds here until the release. We got pound USD on the right, dollar yen in the middle here, gold on the left. Let's see what the numbers are, and we'll break it down. Gold sinking to the downside, dollar yen rising. Numbers probably just came out. Let us know. Comment as fast as you can, guys. Comment in the chat. Link in the chat if you guys. Oh, the link is expired. Ooh, let me get that for you in a second, Caesar. The initial spike to the upside there. Gold spiking down. Pound USD coming down hard here. An initial sell-off of 45 pips. And look at this. This is the craziness of volatility during NFP, you guys. You can get the spike that goes, and then it goes right back the other way. So it doesn't necessarily confirm just yet. But comment the numbers that we have. 261K jobs. That's a beat. Unemployment coming out of 3.7%. That is, I believe, higher than expected. Is that correct? Did we get higher than expected unemployment, yet higher jobs created? That case scenario can be a little bit mixed. So let me confirm if I can get the numbers in front of myself here as well, just to see it. So we jobs numbers came out, 261K jobs created, you guys, compared to the forecasted 197. That's a beat. But then you have jobs numbers coming out with forecast of 3.6% unemployment rate. Unemployment ticked up to 3.7. So a little bit of a mixed bias, though the dollar seems to be strong on the rally. Or on the news, rallying here, the dollar yen is. And then you've got gold. Look at this. Gold stubbornly shot right back up. Pound USD, not so much, came down hard and has stayed there. Interesting to watch gold. Gold seems to be a little bit more resilient than the other crosses. Let's look at Euro USD here, comparatively speaking. Yep, gold being more resilient than that. Both above expected, but these are not both bullish things. One is good, one is not good, right, for the dollar, right? This number here, if you get unemployment rate coming out higher than expected, that's bad for dollar. If you get unemployment jobs change numbers coming out higher than expected, that's bullish for dollar. So a little bit of a mixed release, but it seems this number is outweighing this one today. We have employment numbers coming out with a nice, solid beat in terms of jobs numbers created. My dollar yen position looking healthy. That's good news for the trade. Floating, not too much of a change, but we're up to $600 on that trade, which is nice. Called this one out inside of the Discord channel, which was awesome. Did we get? Sorry, I'm running the stream by myself today because my producing team doesn't get in until another 30 minutes. So we're here early today. Did we get that link correct? I want to make sure I got it to people who needed it. But yeah, I mean, crazy just to see it. Let me see. So this Discord link, let me make sure the Discord link is working. Discord link. Yeah, this Discord link here should work. If you want to join the Discord, this one should work right here. And click that link. That should work. Can someone just confirm that that's working? Because somebody said it's not working. I just want to make sure if you're trying to get in the Discord, you're not like pounding on the gates and you can't get in. Look at that volatility on gold, you guys. What a reaction.
It is 108,000 net change in employment, which is way above expectation.
Wow.
High, better than expected employment and participation rate. All is better. Everything is just good.
Wow. That is a crazy beat. I haven't seen a beat like that on CAD. That's incredible. Wow. Where did that come from? I wonder what the commentary on that is.
Yeah, and to be honest, it's Bank of Canada is a bit more pessimistic going forward, but this one in alone in itself, this just says they need to keep on going.
Yeah.
Even though CPI is the most important, unemployment rate is definitely up there in importance of what they're looking at.
Very, very interesting. Yeah, that's quite the beat there. We hadn't even paid attention to that. Canada unemployment fell. Yep. So all the right numbers for Canada. We had a little bit of a mixed reporting here in the US. Still very solid beat in the jobs numbers, but unemployment slightly ticking higher. But then yes, Ivan brings in the fact that of course we have the CAD pairs, and the CAD pairs, they often do this. They often the Canadian unemployment rates usually fall on the same time as unemployment in the US. And today, again, massive beat here. 108.3K jobs reported compared to the forecasted 11K. That is a huge jump in numbers and a decline in unemployment rate compared to their forecast, which is interesting. What do you think, Ivan? Is that so? What does that tell you? Does that tell you, look for pullbacks on CAD pairs? Any thoughts on CAD pairs going forward?
Unfortunately, I am wiser by damage. So I know this might not last forever because this is just one point. But of course, the only way right now is to look for pullbacks to sell your CAD or to buy CAD yen. But it's only a CAD move, so by Monday it can be over. So for today, it's like a short term. It's a short term for today, and then we shall see how long it lasts. It hasn't lasted long in the past, but sure. Right now it's technically lower on EuroCAD, and technically it's good for me. But it's already gone on EuroCAD.
Take a look at the DXY actually in real time, breaking below this current support level right here, right? And we're seeing that USD weakness. Now it's very interesting to me because I don't think even with the slightly increased unemployment rate, I don't think that that's enough to stifle the Fed from increasing the interest rates at the rate that they have been going. And we even had in the FOMC earlier this week, right? We had Jerome Powell come out and explicitly say that the overall rate is going to end up much higher, right? The overall rate is going to end up much higher. They still need to fight inflation, and there's really no signs of slowing down, as Ivan and Nick were just talking about. So it's interesting, how the market reacts on actual news. And I think some of this may have already been priced in, and the market was kind of just looking for a reason to sell off this most recent move, right? We've obviously had a lot of upside on the dollar recently since we put in these lows here. We had this little correction here, right? And other than that, it's just been kind of a straight shot up. So the market was due for a bit of a correction. And I think that headline with slightly increased unemployment rate was enough for the market to get spooked on the dollar. And as you can imagine, we're seeing risk on kind of rally today, right? So if we go ahead and we look at some risk on stuff like US 30, we're seeing US 30 get some upside here this morning as the stock market opens here. We have S&P 500 also getting a rally here.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the EdgeFinder, you can find that in the description as well. Thanks for watching.